Hello guys, this is Ahmed Al Aziz speaking to you and welcome to another training video with Forex Trading Signal. Today guys, we're gonna go to continue the technical analysis course and we're gonna go to explain the trend and we will explain the candlestick overlapping and we're gonna go to use this overlapping concept on our trade and see how we can use this concept on the trade and how to place our orders. So stay with us please, we will start in a moment. So like usual guys, I would like first to tell you about the chart. So the blue candles are the buy candles and the red candles are the sell candles. So we are using the same chart which we have used in the previous video. So to make this series or the analyses are connected to each other so we don't lose track. So first of all, I would like to draw lines on some or a few candles here. And if you realize here that those lines are drawn on the 50% of the candle body or the body of the candle. And the reason I have drawn these lines on the 50% of the candle body because I want to explain the overlap. So if you take this candlestick here, this one, you will see that we have put the purple line on the 50% and you can see the candle, the other candle after it, it has already crossed the 50% here and it has been overlapped with the previous one. So we call this overlapping. So another example here, this is another candle overlapping the previous one, the sell one, and this is another one overlapping the previous one, and this is another example for this candle which did not overlap the previous candle. So what we need to take from this, if I have a candle which is crossing the 50% of the previous candle, we call this overlapping. If I have a candle which is not crossing the 50% of the previous candle, we call this not overlapping or the candle doesn't overlap. So for example, this one doesn't overlap because it did not cross the 50%. This one doesn't overlap and this one doesn't overlap. So why we need to know this? Because we're gonna go to use them in a moment in our explanation. So let's say these two candles. If I take the first candle and I have put line for the 50% and I take the second candle, you will see that this candle does not overlap or does not cross the 50% of the previous candle. What this indicates to us, that indicates to us strong buy movement. So if I have two candles which it does not overlap each other by 50%, that means it's strong movement. In this case, because it's blue, it's a strong movement for the buy direction. However, if I have vice versa, like this two one, this candle does not overlap or does not cross the 50% of the previous candle, that means this strong sell. Now, we will emphasize in a bit more details. So let's now take this area as a resistance level and let's draw line. So I will not take this. We have spoken about this in the previous video and we call this swing low because the direction of the line or the direction of those candles are going downward. So we can say this is swing low. However, I would like to explain on this swing, which is the swing high, because the direction of the candles are blue and this is the buy direction. So we can say this is swing high. So we have spoken before and we said the movement of the gold, the range of the swing for the gold is almost from $20 to $60. So however, let's say that I want to trade this swing and I have started with this candle. First of all, this candle is already breaking a resistance level in this area. So I am going to buy and target next resistance level. So I'll buy until here. So let's say I have reached this resistance level. However, this candle close here, so still away from the resistance, so I'm going to wait this candle. So let's say now the price has moved almost a range of $40 or $60 or $20, whatever. Let's say $40 moved. And let's say now I want to take a trade from this area. So what are the conditions I can consider to take a trade from this area? I need to see my swing, whether there are any candles overlapping the 50% of the previous candles. So ignore this one because this is breaking. I'm talking now about these two candles here. So if I want to take these two candles, I can see that this is not overlapping, so it's good. So I can consider this movement here overbuy. So if I want to place my order here, definitely my stop loss will be away from my order here. And I am going to target 25%, 50%, and 75% here. So let's say my stop loss was $4, and let's say now I hit my stop loss. So I'm waiting the other candle here. So let's say I have placed another order here and I have almost like another $4 stop loss and I have hit my stop loss here. So now I have total two trade has lost $8. Now coming to this candle, I'm still having candles does not overlap the 50% in these areas. And I have this last candle here. And I have made entry and I have put my entry here. So now I have made my entry. This is my stop loss. And this is my 25% take profit, first take profit, and 50% and 75%. If you realize here, always my stop loss will be achievable by the first take profit, or the first take profit has to be double or triple my stop loss. So always make sure your stop loss is achievable by your first take profit. So if I achieve my first take profit, then I will be moving my stop loss and I will set B. When I set B, that means I need to move my stop loss front of the entry almost 5 pips away on a profit. So when the price hit B, then I will be closing my trade, hitting my first take profit and reducing my risk to zero. So this is another example here for two candles which it did not overlap, and we can say this strong buy. And you can see here, guys, whenever there is no overlap between two candles and that two candles range, whether the swing or the two candles or three candles range is between $20 to $60, immediately there is a retracement either 25% or 75%. So you can see here there is almost like 60%. So if I am taking trade here, then I'll be achieving 25% and 50% at least, and my stop loss will be in this area. So this is what I want to explain in this video. So first of all, to trade properly, you need to make sure that the swing you trade does not have overlapping beyond 50% of the previous candle. And this is what we have explained here in these areas. Second thing you want to consider, you need to make sure that your stop loss is always achievable by the take profit number one or the 25% take profit. So this is has to be achievable. It has to be 1-to-1 or 3-to-1 or 2-to-1 or whatever. But don't make your stop losses bigger than your first take profit. Don't make that. So third thing, I want you to know that the best time frame to trade on the gold is the 4-hour time frame, and the range for that time frame for oversold and the overbuy it's at $20 to $60. When we say overbuy, this is overbuy, guys. This swing is overbuy here, starting from the breakout here until this area, it's overbuy. Why it's overbuy? Because the range is $60 is the maximum, and there is no overlapping between the candle which is crossing the 50%. So we call this overbuy, and this is how to identify overbuy. Similarly, here, this is an overbuy also because the range is 20% and there is no overlapping, which is crossing a 50% of the previous cap. And this is what we mean by overlapping. Fourth thing, which is very important, guys, you need to make sure that you are trading in vacuum. What does it mean? When we say in vacuum, that means the area from the moment you place the trade until the moment you target the first target, you need to make sure that there is no resistance and no support. So if you look here, you can see the first support level, it's almost beyond the 25% of the first take profit. So my take profit is almost achievable in vacuum. That means here there is no resistance and no supports which can prevent us from achieving the first take profit. So the first support level will be below our 25% take profit here in this area. If you put mark here, you can see that this is the first support level and we are trading in vacuum here. This is what we mean by vacuum. However, if you look to this area, you can see that the 75% it is not in vacuum. However, we are targeting 75% because we are trading at zero risk because of the B. So no harm if you are achieving 25% first take profit and you are setting B, no harm of setting 75%. And if you have no vacuum here in the 75%, no harm. However, your first take profit always has to be in vacuum. Vacuum means that there is no support, there is no resistance preventing you from achieving the 25%. Remember that we have taken our entry here based on this candle and this is was the future. It is not available. So you don't consider this in the vacuum. So we consider the vacuum is the area before the entry points here. So this is the first support level. And we can consider this also vacuum for the 50%, even though we have a support level. Maybe if it's breaking this level down, then it will be achieving 50%. I do apologize, guys, for my voice because I was sick in the past 2 days, and that's why my voice little bit having issue. However, finally, guys, I hope that this video was useful for you. If you like this video, please hit the like button, subscribe to our channel, and share this video with your friends so we can reach maximum community. And if you have any comments, please leave it in the comment box. Thank you very much and see you in next technical training video with our technical training course series.